We begin tonight with China's latest crisis, the housing crisis. This is what it looks like. They have more than 7 million empty homes, or more than 7 billion square feet of built-up space. Do you know how many people can live there? According to a Chinese official, these empty homes can accommodate 3 billion people, which is twice the population of India, nearly 10 times the population of America, 15 times the population of Western Europe, and 140 times the population of Beijing itself. That is how big China's problem is. The Communist Party ignored it for the longest time, but now they have no option but to address it because their economy depends on the property sector. It accounts for 20% of China's GDP. 5 million people depend on this sector for jobs. Without a revival, they're staring at salary cuts or worse. They could be laid off. So saving this sector, the property sector, is vital for the world's second largest economy. And how do they plan to do that? With the help of a rescue package, Beijing wants to revive China's collapsing property market. More than 24 developers have already defaulted and home sales have hit rock bottom. People do not want to buy apartments anymore.
The complexity, severity, and uncertainty of the current external environment are significantly increasing. There is insufficient effective domestic demand, high business pressure, and many risks and hidden dangers. The domestic circulation is not smooth enough, and the foundation for recovery needs to be strengthened.
In simple words, the market is bad. There are too many empty homes and no takers. Beijing is trying to fix this. They will buy the unsold apartments from developers. Chinese local governments will do this, and then they will turn these properties into affordable housing. It's not clear how. They'll probably sell or allocate homes at cheaper rates.
City governments should insist on ordering based on demand and can organize local state-owned enterprises to purchase some of the existing commercial housing at reasonable prices for use as affordable housing.
And who will pay for these purchases? Chinese banks. They will give loans to China's state-owned companies. These companies will then buy the unsold apartments. Beijing has pledged some $42 billion for this scheme. And remember, this is not a bailout. This is financing a loan which will have to be repaid.
The size of the guaranteed housing refinancing is 300 billion yuan, with an interest rate of 1.75% and a one-year maturity that can be rolled over 4 times.
China's central bank is setting up a fund of sorts to support this move. That's the People's Bank of China. It is making another intervention. It has slashed interest rates on mortgages. It has also cut the down payment requirements, both for first-time buyers and those looking to get a second property. In both cases, the down payment will be cut by 5%. So this is what the new rates look like. 15% for first-time buyers. They'll have to pay 15% of the apartment cost up front. That's down payment. For a second home, the down payment is 25%. Earlier, these rates were 20 and 30%, so a 5% cut. Basically, China is undertaking a flash sale of homes and apartments. But will this be enough to save the sector? Chinese markets are certainly cheering the move. Stocks of property developers shot up today. Some of them reported double-digit gains, like Vantage, a property developer which defaulted on its debts. Its stock price jumped by 63% in today's trade. The KWG Group reported a 40% jump. Shares of Sino-Ocean Group surged by 46%. But this optimism could be short-lived. Last month, Chinese authorities launched a new program, a swap old for new scheme. It's aimed at existing homeowners for them to swap their old homes for new apartments. Interest rates and down payments were low. Local authorities in multiple cities changed the rules to make these purchases easier, but the scheme did not take off because there weren't enough buyers. And this shows the fundamental challenge with China's property market: high supply, low demand, which is why the state is buying now. Again, will it solve the problem? Will it help the developers who have billions of dollars of debt? Experts are skeptical.
Personally, I'm not strongly convinced about the effectiveness of this measure. So we are now seeing extended crisis, which primarily revolves around the balance sheet of property developers.
State intervention may help only so much because even the state does not have unlimited resources. Beijing cannot buy every empty apartment in China. So while some developers will get support, others may be left to fail. Let me show you a statement. It's from Dong Jiangguo, the deputy head of China's Ministry of Housing and Urban Rural Development. This is what he said, and I'm quoting, "Developers that must go bankrupt should go bankrupt, while those that need to be restructured should be restructured." So China's rescue plan is actually a restructuring plan, and the property sector is in for more pain, at least in the short term.
Firstpost reports from the world's second largest continent. Hello, I'm Alison Lagrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. South Africa goes to the polls on the 29th of May. I will track the election and bring you ground reports. Is it the end of the road for the African National Congress? And will former President Jacob Zuma stage a dramatic comeback? From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global South. Join me every weekday live on Firstpost.